financial bootcamp, financial literacy bootcamp. And Desi LaBelle, who's the president of our board of directors, is here. And he's going to introduce our guests. And Desi, as you know, Angela wants you, before you start the presentation, if you could give us your word of the day and why, that'll help us out. Desi LaBelle and everybody. Clap.
Well, so just real quickly, this is the first installment of our financial literacy boot camp. I have a history with Angela. We know her. I know her from banking. We're doing business down in the Shreveport area. She's helped people in a number of different ways financially. So, and I'll let her run through that. But yeah, she works with a organization called Mission to Fix It Financial Solutions. And so I thought that would be a perfect.
You all repeat that. Mission to Fix It Financial Solutions. Say that.
And I forgot to even start this whole conversation off by saying yesterday was Angela's birthday.
Happy birthday,
Angela. So let me first of all say that before I get beat up. But no, I'm going to let her take it over. I think she'll definitely have some pieces that we can work from.
Desi, what's your word of the day?
Persistent. I'm sorry. My word of the day is persistent. You have to be persistent in life. Sometimes if things one door closes, you have to be persistent and continue forward with whatever your goals are. So,
okay, great. So go ahead and you introduce Angela.
Definitely. So this is Angela Helm. Angela, thank you.
You're welcome. I am so glad to be here. I am so glad that you asked me to be a part of this. This is my purpose. This is what God has given me to do, to pour into many people. But I do have a heart for the young people. But to really, I have a heart, and this is my purpose, to teach people about finances, credit, business credit, business funding. I do it all. But today we're going to focus on money management, credit, even a little bit of identity theft. Because with you guys, this generation, you spend a lot of time on the internet. So we want to make sure you're protected as well. But that'll be a small portion at the end. But my word of the day is legacy.
That's dope.
Everything I teach leads back to legacy. I want to thank you, young men, for investing in yourself by showing up for yourself today. This is important. The gems that you will learn today, I want you to take good notes. And if you implement and execute what you learned today, you can change your life. I heard several young men say their goal in life, one of their goals in life is to take care, whether it's their grandmother or their mother. And that was my goal too. Sadly, I lost my mom 3 years ago. She was killed by a drunk driver. But that doesn't mean that the things I want to do for her, I wanted to do for her, that I can now pour that into others. Right. So the information you learned today, if you really take it and implement it, it can change your life. So I'm really excited that you guys showed up for yourself. I want to tell you a little bit about me. I am born and raised Shreveport, Louisiana. You're going to hear it in my accent as I talk. I'm a Louisiana girl. So it's a little bit of a Louisiana twang mixed in with Texas because we're close to the Texas line. But I have two businesses. I have Mission to Fix It Financial Solutions, which is a financial suite where I help people with credit restoration. I do financial consultations, so I educate them about finances and give them a plan. Life insurance, anything that has to do with finance and credit, that's what I do. I partner with Chase Bank at least once a month where I teach about credit or business credit or other different topics. I also partner with the Small Business Development Center because I am also a small business consultant. So I enjoy what I do because what I do helps people and helps them change their lives. So I want you to promise me two things. One, that you will take at least one thing that you learned today and teach it to somebody else. Each one teach one. I believe in that. That's the only way we can change what I call financial generational curses. And just making sure that our youth have the education they need on finances and credit. So if you can promise me, you guys, everybody promise me that they're gonna take one nugget and teach somebody else.
Yes.
Okay, great, great, great. And the other thing is just take some good notes. Just take some good notes. And at the end, I'm gonna ask each one of you at least one thing that you learned. Can you do that for me?
Yes.
Yes, ma'am.
All right. Well, you guys let me know when you're ready to get started. I'm gonna share my screen because I have a PowerPoint and we're gonna get going.
I think we're gonna we're pretty much ready whenever you are.
All right. Let me see.
What you need tonight? Pen. Anybody else need a pen?
All right. Can you guys see that?
Yes, ma'am.
Yes.
All right. So today we're going to talk about the journey to good credit and financial freedom. And we're going to start off talking about banking. So this is your introduction today to banking. Understanding banking is a crucial skill for managing money responsibly. This is a key element because money and credit rules the world, right? So learning how to manage that is very important. You want to make sure you have a bank account. If you're going to eventually want to start a business, you will have to have not just a personal account, but also a business account. So you start with the personal bank account, really learning how to use it and use it properly. So understanding banking is not just about having a place to keep money. It's a fundamental aspect of financial literacy, and it enables responsible money management, builds financial security, and lays the groundwork for a successful financial future. You can have a bank account because I've been there before when I was younger and didn't know how to manage money. You can have a bank account and it can be overdrafted. That's not good financial money management, right? So about learning the way how to properly use that, learning ways to be able to keep tabs on your money. That's very important. So we're going to talk about security and safety. Banks provide a secure place to store your money instead of you walking around with it in your pocket, instead of you putting it underneath the mattress at home. Unlike keeping cash at home, money in the bank is protected by security measures and insurance. So there's something called the FDIC, and that's where your money is protected up to $250,000 by the government. So that reduces the risk of loss of theft as well.
Can you say that again, Angela? That 250,000 though.
Yes, it's up to 250,000, right? So that may not be just for one account. It may be, let's say, now it's per bank. So if I have 500,000, I may not decide to put out 500,000 in one bank because I want an FDIC insured. So I may put 250 at one bank and 250 at another bank, but it is insured by the government, by the FDIC, up to $250,000. Now the credit unions, I think theirs is NCUA. They have a different protection set in place. It's a different government entity, but with banks is FDIC. So you have different types of banks. You have credit unions and you have regular banks like Regions Bank, Chase Bank. But credit union is going to say credit union at the end. Credit unions are usually nonprofits, and so they don't have the all of the additional funding or different bills, let's say it like that, that banks have. Like banks may have to pay rent for the space that they have. They may not have to do that at a credit union, so they don't have all the expenses that a bank has. So they're able to give you lower interest rates on loans and things of that nature, which we'll talk more about that later. So the ease of transactions, because banks offer various services that make financial transactions convenient. That includes depositing your money. You know, now you can deposit your money through an ATM. You can actually deposit checks right through your mobile banking now, through your online banking. It makes it easier to withdraw cash, transfer funds. You can transfer funds now using Zelle. You can even have Cash App attached to your checking account where your money from Cash App is deposited into your bank account. And paying bills. all of which can be done easily through online and mobile banking. Let's talk about, well, we'll talk about that the next slide. Building a financial history. This is important because although you guys are young now, you want to start banking at 16 years old. You want to have a bank, even if a bank account, even if it's a savings account, start building a relationship with a bank. So when you get to the point where you can get credit at 18, if you need that auto loan, if you need a loan later on, if you need a mortgage loan, they look at the relationship you have with the bank. And I used to be a branch manager for Regions Bank and for Hancock Whitney Bank, so I know this firsthand. When we get ready to do certain loans, a lot of times they will get a different perk as far as maybe the interest rate or some other perks because they had been with the bank for so long. So it does make a difference. A positive financial history is crucial for future endeavors like renting an apartment, applying for a loan, or even securing employment. Earning interest. Now, to be honest, as far as savings accounts, unless you find a bank that has a high yield savings account, what a high yield savings account means, that just basically means that the interest rate is a pretty good interest rate. Most savings accounts and even money market accounts, until they get a certain amount, you're only going to get interest of 0.01%, which is nothing, right? So you want to always do your research and look for accounts where you can actually earn, if you're going to have your money sitting in the bank, where you're actually earning interest. And that's usually a high yield savings. Some CDs as well can do that as well. Budgeting and money management. We're going to talk more about that, but that's a lot of the banks have budgeting options on your own using their online banking. It helps you identify patterns and make informed decisions to stay within your financial means. Access to credit, we're going to go deeper into that as well. Understanding banking is essential for accessing credit. That is correct. For the most part, when you go to get credit, you want to go to your bank because you don't want a lot of inquiries on your credit report. So let's say, for instance, you want to go buy your first car. You don't want to go to the dealership and let them run your credit. You want to go to the bank and get pre-approved, and then you know exactly how much you can spend because you're pre-approved. And then you go to the dealership, got the vehicle you want, and you get a check from the bank and take to the dealership. That's one inquiry on your credit. Versus when you go to the dealership, I remember when I was young and didn't know about credit, I had like 50 inquiries on my credit report because they just run your credit. They're trying to get a sale. They're not worried about what's best for you as far as your credit. Financial independence. Learning how to manage money through banking empowers individuals to become financially independent and instills valuable skills that are essential for navigating the complexities of personal finance in adulthood. And the last thing, and this is very important, preparing for emergencies. Banks provide a secure place for your emergency fund. Now, we're going to talk more about this, so I won't go too deep into it, but you definitely want to make sure you prepare and have an emergency fund. Let's talk about the steps to opening a bank account. Opening a bank account is an important step toward managing your finances responsibly. Here's a step-by-step guide to the process. So the first thing is choosing the right bank. You want to decide if you want to use a bank or a credit union. Like I told you before, credit unions, I always suggest have a bank and a credit union because the credit union is going to be more beneficial on the lending side. The bank, they usually have a lot of the up-to-date amenities like Zelle, and their online banking may be a little bit better. So I say choose both. But if you want to just start off with one account, you choose what's best for you. You want to research this. You can Google these banks and look up the different accounts, or you can just go to those particular banks' websites. Some of the factors that you want to consider are fees. With you guys' age, you should be able to get some type of high school checking, student checking, some checking where it's no fees. That's what you want to look for, an account with no fees. Um, as you get older and you age out of that account, because they will only give you that account until a certain age, then you want to still look for accounts that may have, it's a way for you to avoid fees, like having direct deposit going to that account, keeping a certain balance in that account. If you have a credit card with that particular bank, they may waive the monthly fee. So look for things like that so you don't have to pay a monthly fee. Because think about it. If you pay, let's say the monthly fee is $15 a month. $15 a month times 12 months, that's $180 you just gave to the bank. But that could have been in your emergency fund, in your savings. We don't give away free money. Gather necessary documentation. That's going to be your proof of identity. So that's going to be a driver's license, a state ID, a passport, any type of government issued ID, proof of address. They usually want you to bring some type of utility bill, a rental agreement, or some type of other official mail. Your social security number or your individual tax identification number is most likely going to be your social security number. So you just bring in your social security card. Some banks will allow you just to give them the social security number, but most of them, but I would still bring a social security card just in case. Visit the bank. Go to the branch where you want to open the account. Some banks allow online account opening, so you can do that as well. But establish a relationship with your banker. If you eventually want to start a business, then you want to make sure you establish a relationship with the branch manager, which is exactly what Mr. Desi did. That's how we met.
Yes, ma'am.
So it's very important. And the reason why is, especially as you get older, if you guys decide to open a business, you want to establish those relationships, because let them get to know you. Let them get to know what it is you're trying to do in business, because they have goals to meet. And so if they see some loans or some rate drops, some things that can help you to move further along in your business, they want to help you. And it's also going to help them reach their goals as well. So they may reach out to you and say, hey, we have this going on. Come in, let me see how I can assist you. So definitely make a relationship with your banker. Choose the type of account. So we talked about that earlier. Choose if you want a checking or a savings, or if you want just a checking, or if you want both of those accounts, or just one or the other, is what I'm saying. As you get older and you start paying bills, you really want to have two checking accounts and a savings account. You want one checking account where your direct deposit goes in, any money you have coming in, any income goes into that account. The second account is your bill account. So that means all of your bills. So if you're going to calculate, you're going to know, because we're going to talk about budgeting in a minute. You're going to know exactly how much you need to have in that account each month to cover your bills, right? So if it's $500, you get paid $1,500, you're going to put $500 in that bill account. You're going to take 20% and put in your savings, and you'll keep the rest in that main account. And then you put all of your bills on auto debit, where they come out of that checking account that's your bill account. That way you don't have to worry about forgetting to pay something on time and things of that nature. Because not paying things on time, like credit card payments, loan payments, can affect your credit. And we definitely don't want that. Complete the application. Fill out the necessary account application forms. This includes providing personal information such as your name, address, date of birth, and your employment details. Deposit initial funds. Some banks may require an initial deposit, most of them do, to open the account, but be prepared to deposit the minimum required amount, which varies based on the type of account. The first step, which means, the second step, which means, the first step, which means choosing the right bank. When you do that type of research, you should already know what the deposit is for the initial funds that's required to open that account, because it's going to tell you that when you're researching fees and things of that nature for the different accounts. Please, please, please review the terms and conditions. A lot of people barely look over that, but review that. Carefully review the terms and condition of the account, including the fees, withdrawal limits, and any other important information. Do not hesitate to ask questions if anything is unclear. Never be afraid to ask questions. I am one of those people. I would ask a million questions. Everybody don't like the fact that I ask a lot of questions, but one thing I'm gonna do is walk away with clarity in any situation, because I ask questions. Receive your account materials. After completing the application process, the bank will provide you with the account materials, including a checkbook. You don't really, the checkbooks are really old school. Now, I'm not saying you don't need to learn how to write a check, especially if you are going to eventually, if there's any of you guys that want to eventually they do still use checks in business. But most people these days use plastic, right? Or they are using like Apple Pay and things of that nature. So the main things you want to focus on is your debit card and then your account statements, which you should be going through monthly to make sure that there are no transactions that you did not authorize coming out of your account. Some banks may also offer online access to account information. So that's the next step. Set up your online banking. I used to, with my clients, especially my younger clients, when they came in and I opened up an account, before they left, we set up their online banking. If you can, before you leave the bank, that way if you have any issues with it, they can help you, walk you through it right then. But you need your online banking. You need to be checking your account every day. It could be at the end of every day. It could be at the beginning of every day. It could be the middle of the day. You decide, but check your account every day to make sure there's so much fraud that goes on. You want to make sure that unauthorized transactions are not coming out of your account. We are in the age that the computer age, the data age, where everybody uses the computer or a phone. And a lot of times when you're ordering online, it exposes you to different fraud. So you want to make sure because you can get right on top of it if you see it the day before. If you're not, really paying attention to your statements and you find it 70 days later, the bank usually only gives you 60 days to dispute it for them to be able to give you your money back, which is another plus, another positive of having a bank account. If something like that happens, where something tries to come out of your account, usually you just do a fraud claim and the bank gives you your money back. Activate your debit card. Make sure you do that. A lot of the banks now print your debit card while you're at the bank. If it's one that mails it to you after, make sure you go ahead and not only activate that card, but sign the back of the card. Follow the instructions to activate it. The card will allow you to make purchases and withdraw money from ATMs. Last thing, familiarize yourself with bank services. Yeah, learn about the various services offered by the bank, such as mobile banking apps, automated transfers, and customer support options. Now you guys.
Angela, just real quick, I just want to let the guys know, I will get a copy of the PowerPoint to them as well, just in case they miss some pieces. I'll make sure they get a copy of the PowerPoint as well.
Okay, I'm gonna resend it to you. I'll send you this copy.
Good, cool beans. Okay, thank you.
Okay, so this is the last page where we're talking about banking. So now we're talking about how to manage your bank account. This is very important. Now we went over this. First, we went over the steps of why you need one. The second step was how do you set it up step by step. Now it's how do you manage it, right? So managing a bank account effectively is a key aspect of financial responsibility. So let's go over some tips to manage your bank account. Regularly monitor your account. We talked about that. Set up account alerts. Please, please, please do this. I have it on every account I have. Like if my account goes, my balance goes under $50, I get an alert. If some type of fee or something hits my account, I get an alert. You go through the different alerts, and you can do that through your online and your mobile banking. Go through the different alerts and see which ones works best for you. But what'll happen is you'll get a text message, based off the alert that you choose or the alerts that you choose, because you can have multiple alerts. Balance your checkbook. Okay, like I said earlier, a lot of young people don't use checkbooks anymore. But that's the balancing your checkbook is like what I told you, going through your going through your statement, looking through those different things that are coming out of your account and making sure at the end of the day that you have a positive balance. But we're going to go more over that with budgeting. Use your online banking, take advantage of online banking services, monitor your account, pay bills, and transfer funds conveniently from your computer or mobile device. I do this all the time. I Zelle all the time with my business accounts, and I Zelle with my personal accounts. Create a budget. We're gonna go over that in a moment. Automate bill payments. You can have your bills automatically coming out of your account each month. We talked about that. Have it set up where it's coming out of a bill account. You can use something called bill pay that they have through your online banking. What bill pay is you go in and you put in the name of the company, the account number, maybe the payment address for the particular. Let's say if you're trying to pay a Capital One loan, that you have a bank account at Regions Bank, but you have a loan at Capital One. And so you go in and put all that information in the system and what day you want it paid, and Regions will automatically send a check or some type of electronic payment to that particular company, for example, Capital One, to pay that loan for you. That way it's automated. You never have to worry about going in and making sure you just have to go in each month when you check your statements and make sure that the payment came out of your account. save regularly. We're gonna talk about that in a moment. So I will keep I'll pass that up. Avoid overdrafts. I'm telling you, avoid overdrafts because all you're doing is giving the bank your money. So imagine, and most overdrafts now $35 or more overdraft charges. So imagine if you had 35, it's $35. Let's say you got 20 overdrafts in a year. You just gave the bank $700, right?
Mm.
So keeping track of your account balance to avoid overdraft fees, that helps. Set up low balance alerts. That's what I told you. When my account goes to a certain balance, I get an alert. And consider linking a savings account for overdraft protection. That's really one of the best ways as well, besides the alert. That savings account you set up that you're putting money in each month, you can have that set up as overdraft protection where it's tied to your checking account. So if your account ever goes to zero balance, the money automatically comes out of that your savings account. So that avoids a overdraft fee. Review fees, be aware of fees associated with your account, such as the monthly maintenance fee, because you may think, okay, I got $25 to last me to the end of the month. It's only 2 days until the end, until the beginning of the next month, and then a monthly fee hits, and then that $25 you thought you had, you don't have, and you just paid a bill using that $25. So just make sure you know what your fees are, secure your information. Please, please, please do this. Secure your information. Do not write your PIN number on your debit card. Because let's say, for instance, I've had customers do it, and somebody has got their debit card and used it, or go to the ATM to use it, and because that PIN number was on the card, they used the PIN number. They came in to do a fraud claim because they used the PIN number, which then the only person that should have it is the client. They declined the fraud claim. So do not ever write your PIN on the card. Keep your PIN and your password secure. Be cautious when using ATMs or conducting online transactions to prevent identity theft. The slot where you slide your card in, your on the ATM, if you see where it looks like it's been fondled with, or it's loose, then you may want to use a different ATM because they have these little scams where they go in and put another device over the device where you actually put your card in, and they'll give you information. Understand your statements. Make sure you review your bank statements. We talked about that. Update your contact information. So if you move or you change your phone number, you need to always make sure you go to your online banking, or you can go into your bank. But these days we are in an age of convenience, and most people just use their online banking. Some banks don't let you do it online. You have to go into a bank. But make sure anytime your contact information changes, keep it up to date. Always go online or in the bank to update your address if it changes, or the phone number. Or if you like, for well, it's not for you guys, but you're going to teach information that you learned today. So if it's a female, if she gets married and her name changes, she needs to make sure she goes to the bank, with her new social security number, her marriage license, to change her name. This ensures you receive important communications from the bank. Here's the other thing too about bank statements. Get your bank statements electronic. Do not receive them in the mail, because somebody can go into your mail, steal your bank statement, and your account numbers on it. Some banks only put the last 4 digits, but some banks still put the full account number. So get your bank statements, receive them electronically so you don't have to worry about it. It limits fraud. Periodically review your banking relationship. Consider periodically reviewing your banking needs and the services your bank offers. You may outgrow your bank. I've outgrown more than one bank. As I've grown, as I've gotten older, some banks where I started, they were not able to grow with me. The needs that I had, the services that they offered, or the lack of services they offered, they weren't able to assist me in the way that I needed to be assisted. So I had to move around to another bank. If your financial situation changes, you may need to adjust your account type or explore additional services. Last thing is plan for major expenses. If you have upcoming major expenses, plan for them in advance. This can include setting aside money for annual fees, insurance premiums, and known expenditures. I'm sorry. Now we're going to talk about budgeting. This is a very important piece, and I really want you guys to get this. I'm gonna send Desi when I send him the PowerPoint the link to a digital budget that you can use, and you can keep track of your income and expenses for 12 months. Um, Share it with your mom, share it with your grandmother, share it with your dad. Some of this information you guys are learning today, go share with them. Let's talk about what a budget.
Hey, Angela, 1 second.
Plan that
You gotta
details.
pay attention. 1 second, Angela. You gotta pay attention to how you look on the camera. Sit up straight. Stop falling asleep. Any of that. It's not happening a lot, Angela. I just got a couple of people that aren't following my rules, and I need them to follow my rules before I point them out. All right, go ahead, Miss Angela.
Okay. So first we're going to talk about what is a budget. It's a plan that details income and expenses to help support financial goals. So basically what a budget is, it can help you make sure you do not run out of money each month. It'll help you save money for your goals or for emergencies. So it's two items, two different parts of a budget that you want to really focus on. One is your income, that refers to the money or your financial resources that you have coming in each month, right? And then you have expenses. The expenses is the money that you spend or the cost incurred by an individual in order to purchase goods, services, or assets. Some different types of income sources may be from Social Security, from disability benefits, child support, income you may get from investments, the money you get from your day-to-day job, your 9 to 5, any type of increase in funds that's each month, or sometimes it may be quarterly, or annually. But any income that you have coming in, which is mainly monthly, that's your income. And then you have your expenses, which is dining out, entertainment, utility bills, groceries, transportation costs, and personal care expenses.
I'm sorry, Angela. One of the young men had a question. I know we're gonna save questions till the end, but he had a quick
No,
question.
that's fine. Go ahead, answer those, ask those questions.
What did you say? What did you say the main reason people budget for? Basically, what is
You
budgeting?
budget because you want to know if you're going to have money left over at the end of the month. So let me stop sharing for a moment. I'm gonna actually show you a budget sheet so it makes sense to you. Give me 1 second. You guys see my face right now? Do you see the PowerPoint?
Oh, we see your face.
I see your
We
face.
see your
Okay.
beautiful face.
Well, thank you. So let me pull up this budget sheet because I want you guys to really see this. And I'm gonna send the digital option, but I'm also going to send a paper option too, so you guys Desi can give you that. You can print it and then practice. Give me 1 more second. It's coming, it's just moving slow.
Oh yeah, definitely.
What is the best bank in your opinion that you use?
Well, I'm gonna tell you this: it's different banks in different states. See, I'm in the southern region, and you guys are in a different area. So it's some banks here that you won't have there. Chase Bank, if you're looking for a bank, Chase Bank is a great option. Bank of America, Wells Fargo.
When they're evaluating what type of bank should they go to, I know that, it has to be local and so forth. Is there some other? I know you went over a couple of pieces of criteria. What should they look for in trying to decide what bank works for them?
They want to look for a bank that offers no fees on a checking account for them.
There we go.
That's
Okay.
the first thing.
Okay.
You don't want to just be giving the bank your money. That's one of the things you want to look for. You want to look for a bank that you can grow with as well. Look and see if they have secured options for like a secured credit card. We're going to talk about that in a moment. Or a secured loan, right? Because when you get ready to start building credit, you may have to use those type of products to build credit. And so you always want to be with a bank where you are, where you can grow with that bank. So if they don't have those types of products, then I probably wouldn't choose them as well.
Okay.
There's
Well,
another question.
I think we have one more question before you.
Yeah, go right ahead because I'm pulling this up, so that's fine.
Okay.
Right now, when you was talking about avoid overdraft fees. You know how some banks they give you like a overdraft limit. Do we avoid those too?
Yeah, anything with overdraft you want to avoid. Like now, I will say this: Capital One has an account now. Well, not an account in general. Capital One, does not charge overdraft fees.
Right.
So
Yeah, I
even if
know.
you go ahead.
No, I was saying like, like mobile banking or just some bank, they give you an option. Like if you got direct deposit and you a good member, they'll give you like they'd be like, okay, we could give you like $40 to overdraft and stuff like that. We won't charge you like a fee or nothing. It'd just be like, you can't go past this $40 limit. Like after your balance is zero, you get like an extra $40 or something until your next paycheck comes or something like that. Do we try to avoid those as much as possible, or like if it's convenient, do we use it every time, or is it effective, or something like that when we use it?
I wouldn't say avoid it. What I would say is this: I want you to learn to manage your money so you don't have to. But I'm a realist too. Life happens.
Right.
So if you want protection if something like that does happen. Right now we are in a recession. And so sometimes that check, maybe you're getting it 2 days later, but your son needs football cleats.
Right.
Right. So I know I was that mother. I was a single mother with 3 sons. And sometimes back then in those days, I did it.
Right.
Straight up.
I spent $75 or $80 on my son's football cleats. And now this is nothing I did every month.
Right.
You know what I mean? You don't want to get in the habit of doing it, but you do want that option available if you need it. Because life does happen.
Well, Angela, if I can right there, what Jeremiah is talking about, I think, is what I see a lot of people get themselves in trouble with banks that have overdraft protections.
Mhm.
Whereas when you get ready to, for instance, educators credit union, I hear people talking. Whereas at educators credit union, and you can have, I don't know if it's the overdraft protection, but you can get up to $700 when your account goes to keep it from going into overdraft. You can pull from that $700 to cover in your account. They have that, but I've seen people get in trouble because if you don't pay that money back when it's supposed to be paid, the interest rates are so high, and you could get into a lot of trouble where your account, if I'm correct, your account will be closed down, and that is detrimental to your credit.
Correct. I totally agree with you. One of the things I normally teach is this mindset. It starts with that.
That was somebody's word today. Somebody's word was mindset. That was right there. There we go.
There's always going to be areas, especially when it comes to money and credit, but in life in general, where you have a choice to make. And so even if you go to a bank that has that option, it's up to you because you can opt out of overdraft protection at any bank, right? So you can either opt out of overdraft protection, or even if, but let's say for instance, that particular bank, you bank with that bank and you can opt out of it. It's about your mindset and money management. That's why it's important to teach you guys these skills. Just because it's there, don't mean that you have to use it, right? So it starts with the mindset and how you view money. Is it more important for you if it's a $700 overdraft available and you're using it because you want to go get those Jordans that came out a month ago, or you want to go on that vacation and use overdraft protection? Then no matter if it's that bank or any other bank, you'll find another way to still get the money.
Right.
So it starts with changing the mindset, your mindset about money, your mindset about credit. Okay.
So, Angela, is there a difference between some of these I see a lot of the younger guys, they go with the chime cards and so forth and so on. And I know those are online banks versus I guess you would call it a terrestrial or actual functioning bank here in the city. Is there a difference between the online banks? I mean, should they be using one or the other? How does that work?
I don't really care for online banks. Let me tell you why. There's nothing wrong with them. They don't have all the expenses like a regular brick and mortar, a bank that has a building. So they may offer certain perks like credit unions because they don't have that overhead. but you're not
Right.
building a relationship. Most of them can't offer some of the things. Chime can't give you the things that a Chase can give you, a Regions Bank can give you, right?
Right.
So a lot of people use it for credit building. They use Chime for that, but it'll be better for you to be with a bank and get a secure credit card, and rather get a card with Chimes, and it's not with a what I would call, I don't want to say a reputable bank, because Chime is reputable, but you want a bank you can grow with. You can't grow
Right.
with a Chime.
Gotcha. Okay.
Go
Okay.
ahead. You had a question?
Yeah, I was about to say, some of them online banks, they have real banks that that manage them. I think it's like Chime is like Southern Bank or something.
They're all
like that.
managed by banks.
Right.
Yeah.
Yeah. So I'm saying, what if we what if we get in tune with them, the banks that manage them? Would that be
Well,
good? We got to be in that city that the bank is from, because some of these like Chime, they bank is like out of state somewhere.
That's true.
It's not a bank in Milwaukee.
well, it's all about doing your research, remember? So
Right.
anytime you choosing a bank, you do your research. Like Chime, there may be some homework for you guys. If some of you guys are thinking about getting an account with Chime, go look and see what services they offer. Go see what type of loans they offer. Go see what type of credit cards they offer. And definitely with Secure, because you may have to start that way to build credit. If they don't have that, you don't need an account with them.
Right.
And
Like
although
Chime,
they may be managed or controlled by other banks, with different banks, as long as they have something called a footprint, right? So Regions
Digital.
Bank is in Louisiana. There's Regions Bank in Indianapolis. My brother lives in Indianapolis. He's for Regions. They're all over Florida, these different states. So I can be in Louisiana, move to Florida, and I'm still okay with a Regions Bank because they are in that area. They have a footprint there, right? So that's what you want to look at when you're looking at. You say you want to research those banks that may be owned in those companies like Chime. See where they are. If they're in their footprint is in the area that you're in or close by. If you feel like that bank is just a great bank and you want to be with them, and you've researched the products, that's what it comes down to, research, then there's nothing wrong with opening an account there.
Right.
Hey, Angela, now let me ask you this. Are we now asking too many questions that you can't get to the other part of your presentation?
Right.
Or is this okay with you?
This is what I'm gonna tell you this. The question's really gonna pour in when we get the credit. So I'm gonna run quickly through budgeting.
Okay.
Well, let me make sure they don't have any more banking questions. I'm gonna run quickly through
I
budgeting.
do have a banking question.
Yeah, go
I
ahead.
want to ask you about cash back on the credit cards and the spending or the ATM or the cards from the bank that you give with your account. Some people, I saw a very wealthy person say they pay all of their bills and take care of everything through cash back. So therefore, their regular money is not affected in some way.
Yeah.
And and cash back is earned.
So let me tell you, so those are points or cashback rewards. I am one of those people. And when I didn't want to go too deep with them, I'm gonna hit that in credit, but let me hit it as far as banking. So that bank account that they have, like I said, 2 checking accounts and one is for bills. When they get to the point where they get credit, and we're gonna talk about that toward the end, they get that credit card that has a pretty decent limit, enough to pay all their bills each month. They can have all their bills actually coming off their credit card each month, so they're getting points.
Right.
And then pay that one credit card bill each month using that bank account. Have that payment automatically come out of the bank account, right? So that means that their bills is $2,000 a month. They're using their credit card. Most banks give you $1 per, and some of them 1 point or $1 or more per dollar, right? So let's say if it's $1 per or one reward per dollar. So if your monthly bills are $2,000 and that means you're getting 2,000 points a month. Now you add those up over a year. Then you can turn around and use those points, because I do this. I book hotel rooms, I book travel. You can get gift cards, but a lot of the different stores and things that you attend, that you shop at. You can get that money put right back in your account as well. So let's say if you gather 10,000 points, 10,000 points may equate $1,000. I'm just putting a number out there. Where if it's
Sure.
$1,000, that means that particular credit card company put $1,000 back into your credit card balance. Right? That's the smart way to do it, because what it does is save you money in the long run. If I need to travel, instead of me coming out of my pocket, I'm using points. And that's something I really want. We're gonna really hit that with credit, because the credit piece, the money piece, and the credit piece, budgeting is very important too, because you got to know how to manage that money. But that credit and that money piece, if you get that, you will be a force to be reckoned with. Okay, so I'm really gonna go hard on credit. That's my thing now. I love me some credit. Any more questions about banking though? Go right ahead.
Yeah, I had a question. So this confirmed that you can pay bills like your rent and utility using cashback.
Some, let me tell you this, some depends on your landlord, or if you stay in an apartment, the company, most of them will take a credit card, but some will not. They want cash. So if they want cash, you pay it out of your bill account, right? You never take a cash advance off of a credit card.
Right.
Because let's say if your interest rate is 15%,
Hear that?
there's something called a cash advance interest fee as well. You're gonna have two interest rates that you're paying until you pay that money you took off for that cash advance. So let's say you got a $5,000 limit on your credit card. You go take $2,500 off, but you're just making a minimum payment each month. You're gonna pay a cash advance interest rate fee plus your regular interest until you pay that $2,500 off. That's gonna take forever for you to do if you're just paying a minimum payment.
Right.
Never take cash off of a credit card. Now, when you get in business, and I'm probably going too deep with this, there's something called cash. What is it? Hold on, I wrote it down. It always slips my brain. Balance transfer checks that you can get with a credit card. Not all credit card companies offer that. So with business credit cards, you're able to get higher limits. So let's say if I have a $25,000 limit and I want to take $25,000 off of that to go buy me a property that I can make a rental property, right? I get a balance transfer check. They will take that, I write a check from that credit card. That's basically where the money's coming from. Deposit it in my business check account. And I just took $25,000 off my business credit card. It's not a cash advance, it's a balance transfer. And now it's available in my business account for me to use for my business expenses. Or the best thing for you to do is use it towards something that's going to give you revenue. So like if I want to purchase a rental property that's, ready to go for $25,000, now that person is paying me rent. That's how I'm paying that credit card back. Okay? That's the only way to get money off a credit card. Do not do cash advance.
Okay, so Angela, and I know you said you want to run through it, no question, but I want to ask you this real quick. So if you have a cash back credit card that you get cash back on, isn't there an option usually that you can link that to your bank account or those money? Are those transferable funds?
Yeah, it depends on the company. Some let you do it where it goes back into the credit card. Some will let you put it into an account that you choose. It depends on the actual company. So it all comes down to research. Read. Don't just go off what people tell you to. Verify by reading the terms and conditions. Because different companies do different things. American Express may do something different than Citibank, right? So you need to make sure, and then American Express, I'm telling you, when you get ready to get a credit card, after you build up your credit profile, that should be one of the main ones you go to when you're at a 670, 680 or higher. That should be one of the main credit cards you apply for is with American Express. Okay.
Don't even go without it.
That's right. Because with that, you get credit cards with them on the personal side and business side. After you with American Express, it's the soft inquiry moving forward. So it's no longer a hard inquiry on your credit report when you apply for other credit cards with them through AmericanExpress.com or American Express representative. If it's a credit card like with Amazon has an American Express credit card, and so does Navy Federal. it's going to be a hard inquiry because although the card is with American Express, it's not through, you didn't go through American Express to get it, right? So that's why I say,
Andrew, I'm not sure I'm not sure they understand what the inquiry.
right, I went too far with that. Let me back up. They won't even give that till we get to credit. So I went too far.
Okay.
Let me keep going. I'm sorry. My passion
The rich
started.
people understand you. Adam.
All right. So I want to show you, this is a paper budget sheet that I'll send Desi. And then I'm going to show you the electronic version. So at the top, oh, wait a minute. I didn't share my screen. Hold on. I'm sorry, you guys, that I went over your head. I apologize for that. That was way too much.
But it gives them something to research.
Yeah. Yes, sir.
If
Right about
they're
that.
if they're interested, they'll go find it.
All right. Can you guys see that budget sheet?
Yes, ma'am.
All right. So I'm gonna send this to Desi so he can print this out for you guys. You can practice these. This may be something that you guys do up there, you know, at the and working together to do it. But the first thing you want to do here is list your income, right? So it shows your paychecks, things of that nature. Then other income, which could be from child support, disability, social security, etc. That money goes here, and then you total it up. Okay. Next, you're going to go through your monthly expenses. That's the money you spend on rent or utilities, internet and cable, groceries, meals out, things for that nature. So you will write all of those down, what they are monthly. And some of these may vary, like car maintenance. That's not something you're going to have monthly, right? So you may just estimate how much you may spend a year on that and divide it by 12 months. And that way, that in that monthly area, you'll just put what that is for 12 months. So for example, let's say you said I'm gonna spend about $1,200 a month. I'm sorry, a year on car maintenance. I'm gonna divide that by 12 months. That's $100 you'll put there each month for that. Okay, to budget. So once you calculate all of your expenses, you'll put a total right here. Then right here at the bottom, the number that you have for income, you'll write that in here. The number you have for expenses, you'll write that in here. Then you'll subtract the income, the expenses from the income, and that number goes here. If this is a positive number, you're doing great. That means after you pay all your bills each month, you still have some money left over. If this is negative, that means you need to go look through all these expenses and you need to start, you know, kind of doing away with some things, minimizing some of the costs, or canceling some things, right? So you may say, groceries. Oh, I've been spending $400 a month. I'm gonna reduce that to $200. If your expenses, if your total is negative after you subtract your expenses from your income. You may be paying for cable and you may say, you know what, I'm gonna cancel cable and I'm gonna just get Netflix because I'm negative now. I need that money coming back in each month, right? So that's what you're doing. You're writing down income, so writing down all your expenses. You should be doing this every month, especially as you get older and you get bills where you're paying your own bills. You need to get in the habit of doing this every month. Okay? Do you guys understand what I just showed you? If you
Yes,
don't,
ma'am.
please, I'll go back over.
We follow you.
Okay. Now I'm gonna show you the electronic version. I know you see a lot of numbers, so I'm gonna zero this out so a lot of this will go away. All right, so here where it says income at the top, monthly primary income. So I'm going to put here that I bring in $5,000 a year. So that's going to total that up for me automatically, that I'm bringing in $60,000 a year. If I make $5,000, if I'm bringing it home every month, that means I'm bringing in $60,000 a year. Okay. All right. Now my expenses. So I'm gonna just put. You're gonna go in and total the expenses, right? So loan debt. If I owe any loans, I'm gonna put that amount there. I'm gonna put zero because you guys haven't started credit yet. For rent, you may give grandmother or mom $200 a month for rent. Credit cards, you may pay $100 a month for your minimum payments, or if you pay it off each month. Car loan, I'm gonna put 100. Student loan, I'm gonna just put 100. Now it goes down to the utilities. So it's just gonna break it all down, and then it's gonna automatically calculate these numbers for you. So I'm not gonna go through each one, but as you put your numbers here, it calculates it right here at the top. So the rest of this, I'm gonna just leave it where it is and just act like that these numbers are correct. And like you see here, it has wants, which we have to talk about that next. It has daily life, miscellaneous, savings and investing. So you should also have what you want to be saving each month, which should be 20% of whatever you bring in. So your emergency fund, you may be putting $500 in it a month. I'm just putting a number there, right? So what that does is, based off your income each month and your expenses, it's going to show if you have a positive, if it's positive at the end of the month. Okay, so I'm gonna put projected monthly income, $5,000. Let's say my total expenses added up here says 4812. Okay, well, it's calculated now, it's not. So for some reason, I don't know. I'll fix this, but basically where it says net balance here, yeah, for some reason something going on with the formula. Net balance is the starting balance. It means if you had some money already in your account. So let's say you had $100 in your account. It's going to subtract the 4812 from the $5,000. That's your income from your expenses. That means I have $188 left over, but I already had $100 in my account. So net balance is going to be $288. And that means at the end of the month, I have $288. I'm positive after I paid all my bills. So now guess what? I'm good. Does that mean because that $288 is there, now I can go splurge? No. I may say, okay, I'm gonna take $100 out of that and go do something else I want to do or buy some, whatever it is you want to do. But you don't want to just spend your last dime, take and spend everything every month. You want to have some money still in your checking account each month. Okay. I'll fix this and send this to Des and zero it all out so it'll make sense to you guys once you finally get it. But you guys may just want to start pretty simple with the paper document. That's what I would do, Daisy. Start with the paper document first, because the digital one, because it's so extensive, it may be too much.
Well, yeah, a little savvy. Okay.
Hey, Angela, is it possible, am I correct that usually at Office Depot, you can find some of these sheets already printed up for you?
You can, and let me tell you where you can get free resources. I think this will be something beneficial to you guys. The FTC, the Federal Trade Commission, has free documents that you can get for free. Like if you're going to be teaching about different things with loans, finance, that's why I got this budget sheet from. If you look at the budget sheet, let me see, it may be at the very bottom. No, I took it off. But Des, if you'll see me that in the email, just ask me that question. I'll respond and send you the link to it. But you can actually order these packages and you can order those budget sheets.
Awesome. Okay.
But Office Depot does have them too. But if you want them for free, because I believe in saving money in the way I can, I would get them for the Federal Trade Commission. All right, let's talk about needs versus wants, then we're gonna hit credit and then we'll be done.
Okay.
Can you guys kind of tell me, some of you guys give me an example of what you think a want is? Give me an example of one want.
A want is like a video game.
Yep. And what's something that we need? Somebody give me something that we need.
You need
So wash up.
food,
Water, gas in your car to get to work.
There you go. You guys are on it, and I love it. Knowing the difference between a want and need is an important concept in personal finance. Because sometimes we think, oh, this is something I need, and you don't really need it. Some of the common examples of needs are food and water, shelter, clothing, healthcare, education. Right? Education doesn't mean college. For some people, it's college. Some people, it's a trade. Right? Examples of wants: travel, vacations, movies, concerts, sporting events, luxury goods, like high-end fashion items, expensive gadgets, like PlayStation 5s, video games. That's the stuff that goes on in my household that I know about. Dining out, hobbies, and recreation. This is something, and this we talking about this as a one, but this is really. I just did a class about budgeting, and 90% of the people in the class, a lot of the money when they did their budget, they went through 90 days of their bank statement. Their money was going to eating out, so their money was going to something that was a want versus a need. So you really want to limit how much you eat out because it's a lot in the way a lot of Americans live their life. They are eating away their money. They eat their money instead of cooking their home or things of that nature. They eat out 2 or 3 times a day, or they eat drinking Starbucks, and nothing is wrong with it. You don't want to take everything away from you, but you want to be able to do that in a way where you're not overextending yourself, okay, and your finances. Planning for emergencies. I go through this really quick. You want to have at least 3 to 6 months of monthly expenses saved for emergencies, right? So emergencies, or like if your car breaks down, you know, eventually when you guys get children, if your child is sick and you have to take time off work, you still want to be able to the money you're supposed to make that week from work that you may not get paid. You can have that in the savings so your household is not affected financially because you had to take off with your sick child or for yourself because you got sick. It allows you to cover essential expenses such as housing, food, utilities, transportation, and debt payments during a temporary loss of income or foreseen expenses. Because of time, I'm not going to go deep into that. Just know it doesn't matter if you got to start with $5. Get into the habit of saving. As you continue to grow, your savings, the way you save will increase. But just get into the habit, even if it's $5 a month, save it. I'm gonna skip that. So I am going to talk real quick about ways to grow your savings. A lot of times you guys have birthdays, graduations, different things where you get money from family members, friends. That don't mean as soon as you get it, go spend it. It's okay to put it in the savings. Or if you get $200 from graduation, maybe put 100 in savings and then do something nice for yourself. Just get into the habit of saving. Just you don't want to spend every dime you get. Even if it seems like it's something extra, get into the habit of saving some of that. Now let's get to the nitty gritty credit. What is credit? It refers to your ability to borrow money or obtain goods or services with a promise of repayment in the future. They always say cash is king, but credit is king. Even if you don't have the cash, credit would allow you to start a business or do some other things where you can bring in cash, bring in revenue, even when you don't have it. So I say credit is king. The importance of credit is useful in times of emergencies. It allows you to pay for large purchases over time. It can help you obtain employment, insurance, and housing. We definitely gonna talk about that. It's best to use credit while you are traveling to reduce fraud. So let's talk about useful in times of emergency. Tell you a quick story. What happened with my son? I have my middle son who's almost 25. He um he does IT and cybersecurity, where his contract ended. So now he's in the middle of going, applying for other jobs. Prayerfully, he has a new one by next week. But in the meantime, he still has bills to pay. He's a man. So mama don't take care of him. He take care of himself. So he starts Ubering. So now his job, his car is how he get, which most people, if you have to go to work every day, if you're not working from home, your car is very useful for you to be able to go make the money you need to make. Well, he's Ubering right now. And so he needs his vehicle. He gets a flat tire yesterday and he gets it towed to the tire shop and they tell him, sir, your warranty doesn't cover the tire because you needed a wheel alignment and that's what ruined the tire. So while he's there, because I've always made sure I've maintained his credit and taught him about credit. So while he's there, they say, well, you are pre-qualified for our card, for our discount tire card. So he calls me because he's not gonna do anything with his credit unless he calls me. And at first I said, no, we don't want no more. We don't want any more debt. And then I thought about it. Well, it's only gonna be $200. He's making enough money to pay it off, but this is what he needs now. He got 2 brand new tires using the credit. It was an emergency. He didn't have the money. I was going to send it to him. He was going to have the money in 2 days, but he needed it now. So instead of him saying, let me get the money from my mama, his credit allotted him to get the card he needed to get the tires he needed. If he didn't have the credit, or his mama didn't have the money, that car would have been sitting at home, and how was he going to make money?
Right.
So if credit is useful in times of emergency. A lot of times people don't realize that when you go to apply for certain jobs, when you go to get car insurance, homeowners insurance, that stuff is based off your approval, or the amount you pay is based off credit. If I'm an organization, like when I was in banking, if I was applying for the bank manager position, and it's me and another person, and they got to choose between us, they're going to go with the person that has the better credit. Because one of the C's of credit is 5 different C's, so different names that start with a C, is character. So when they look at your credit, different employers, they look at that as your character, basically how you use your credit. So I want you to look at credit as more than just buying things. It can save you money in the long term if you are paying a lower insurance rate price each month because you had good credit. Let's talk about a credit score. A credit score is a number that helps lenders determine your credit risk. There's 2 types of credit scores. You have Vantage scores and you have FICO scores. Now, when you're putting up Credit Karma, that's a Vantage score. Do not use credit scores from Credit Karma. They are not accurate. Okay. A FICO score is what you want to look at. That's where you can get those through Experian.com, Equifax.com, TransUnion, or something called annual credit report won't give you your scores. But you want to look for where it says FICO score. Because if you go to get a credit card from a bank, a loan from a bank, a mortgage, they're going to look at FICO score. Okay. The scores range from 300 to 850. 850 is hard to get, but it's a lot of people that have an 850 score. It's all about knowing how your FICO score is determined. So let's look at that real quick. 35% is payment history. 30%, excuse me, payment history. Making sure
this is important, y'all.
Life happens. You may be a day late paying your credit card payment. Just make sure you're not 30 days late. You should get into the habit of paying your bills on time each month. But you want to make sure that if you're waiting on your check to come in, you got to wait a week to pay your credit card, that it's not going to show up on your credit unless it's 30 days past due. Okay? Utilization, that's basically the amount of the credit card that you use. So your balance versus the limit. So if my limit is $1,000 and I've used $980 of that limit, of that credit card limit, I'm at almost 100% utilization, and that's going to drop my credit score. So you want your utilization, you don't want to use more than 30%. And if you want majority of those points that makes up that 30% of your score, you want to keep it at 10% or less. So the way you calculate that is this. You take your limit, let's say your limit is $1,000, and you multiply that times the percentage of utilization you want to keep the card at. So let's say we're going to look at 30%. So you will do $1,000 times 30%. That's $300. That means you don't want your balance to be more than $300, or it's going to start affecting your credit score. You need to learn that, because I have people come and say, my credit score is a 590. I have no late payments. I have no collections, but my credit score is low. And when I pull up the credit, all their credit cards are maxed out. So guess who, a long time ago, but before I got into banking and learned about credit and learned about finances, guess who had 12 credit cards maxed out? Me. I didn't need 12 credit cards, but I didn't know. How many of us have been taught about credit at home? I can't see you because I have my PowerPoint in front of me. Matter of fact, I'm gonna stop sharing because I want to know that. How many of you guys, somebody's teaching you about credit at home?
Not at home, but we learn about it.
You're learning about it. Great, great, great. So the ones of you that have not or not getting taught that at home, guess what? You were me at your age. I just knew to pay my bills on time. My grandmother taught me that, but I didn't know anything about credit. So
Right.
the information you're learning today, you will be a father at one point in time, or you are already a father. You learn this information and implement it for yourself so you can teach your children. That's how you build legacy.
Right.
That's why
There we
legacy
go.
is our word for the day.
Right.
Right? You learn this and you use credit and finances properly. This is how you build legacy. Okay. So let me go back to the PowerPoint. I'm sorry.
No, that's
Oh,
I was one of those.
that was powerful.
Dynamite.
Yeah, that was powerful.
Well, thank you. I appreciate that. I was one of those people that had 12 credit cards maxed out. Once I started in banking and I learned about credit, I started slowly paying on it. And then once my credit score got up to a certain place, which was like a little in the mid, between the mid and low sixes, I went to a credit union. Remember, I told you they're easier to get credit. And I did a loan and they paid all my credit cards off. So that meant my utilization went to zero. My credit score went from a 591 to over 700.
Wow.
It was just credit card debt, y'all. So if you learn these 5 things I'm teaching right here, you will keep a great credit score. Or if life happens, you will know how to rebound. Because if you are, let's say you get a couple late payments and your credit score drops, you know you need to be strong in these other 4 areas to bring your score back up. Okay. So length of credit history is 15%. That's why I want you guys, if you have parents that have credit cards, that they don't have late payments on them, or you have an uncle or aunt, grandmother, somebody that has credit card, they don't have any late payments, they pay their bill on time, they keep the balance low. Ask them when they add you on their credit card as an authorized user. You will not get their card, but you will be listed on their card as an authorized user. So you're building credit before you're 18.
Right.
I did that for all of my children. By the time they were 18 years old, their credit score was over 700. All I had to do was then start, they didn't even have to start with secure credit because they had a credit profile. So for them to get their own credit profile, which means credit in just their name, we didn't have to do secure credit cards, but we're securing it with their money. We got unsecured card, which means the bank who has that credit card just gave us a credit card, let's say with $1,000 limit, and we didn't have to secure it with our money. Right? So that's because they had already built up a good credit score. So length of credit history, start building credit so your credit can get older. The older, the better. That's how you get up to those 850 credit scores. New credit, limit your inquiries. You do not want to do more than 2 to 3 inquiries a year. That's why I say go to the bank whenever you're trying to get a vehicle, so you don't end up with a lot of inquiries on your credit report. Don't just go in once you start getting credit, applying for this card, because you get excited because now you can get credit.
Hey,
Last thing,
Angela, I just want to make sure I understood what you said. You said that they should seek to not have more than 2 to 3 inquiries per year.
Yep.
Awesome. Okay.
Yep. And especially if you're going to start a business, because once you start, you getting business funding and business credit and more business credit, like business credit cards, they look at the amount of inquiries you have on your personal credit. And if it's too many, they will deny you.
Right.
So make sure you don't get into the habit of just getting stuff because you want to remember, research. Be very meticulous about what accounts you want. Research the credit cards you want. What are the perks? If it's not a 0% interest rate credit card when you get it, if it doesn't offer rewards, points, or cash back, I won't want the card.
Right.
I need that card to work for me. Types of credit. You want a mixture of credit. You want at least one installment loan. An installment loan is like a fixed rate loan, like a secured, like an auto loan, right? So that means if they give me a car for $10,000 a month, they say you pay $250 a month for the next 5 years. After that, you owe nothing. The car is yours. That's a fixed rate loan. right? You want some type of installment loan. These loans that you have with a firm now, like if you order some online, you know, a firm now shows up on your credit. That's not a good example of one because too many of those loans do not look good on your credit. Okay. So you want at least one installment loan and you want at least 4 things reporting on your credit to have a strong credit profile. 2 of those needs to be at least a revolving account like credit cards or a store card like with Bath and Body Works or you know whatever these stores you shop at they offer card, JC Penney, things of that nature. Um, so 2 types of revolving accounts and some type of installment loan. But to have a strong credit profile, you want at least 4 accounts reporting on your credit.
Okay.
Angela, when you overload, can you have too many credit cards?
Yeah, so I'm gonna tell you this. I still have my 12 because I didn't close them because here's the other thing. You never want to close credit cards either. Now, have I closed some? Yes. One that I may have had for a year and they were charging me some type of fee. I got rid of it, right? But it was the way they did the fee. It wasn't really giving me rewards. It was one that I got when I didn't need to get it, so I got rid of it. But if you have age, and what I mean by age is how long you've been with that company. You do not want to cancel credit cards because let's say you've had that credit card for 5 years or 10 years and you go close it, although it will still be reporting on your credit, it will be reporting as closed. So you lose that history into the algorithm of your credit score.
Okay.
I've seen people when I was in banking thought they was doing the right thing, closed all their credit cards, and they came to me with like a 500 credit score, and they was like high 700s, close to 800. They closed all their credit cards and run their credit. They basically had to start all over again.
Is there a best way that you should close your credit card?
Just call the company and close it. If you want to close it, what I tell people is this: if you have some credit cards that you don't want to use, put a subscription on it, a Netflix, Walmart membership, the Hulu, Amazon. Put some type of monthly payment on it, let it automatically come off each month, and let the monthly payment automatically come out your checking account. That way it still shows usage, and the original, the lender doesn't close the credit card because if you don't use the credit cards as well, the lender will close it. Because that's what happened during the pandemic, during COVID. A lot of people weren't using those cards, and I know Synchrony Bank was one of those banks. They went and closed a lot of people's cards because they weren't using them.
Right.
So that's why I said, put some type of automatic debit coming off each month. Did that answer your question?
It did. Yeah.
Okay.
Another couple other questions.
You said you have another one?
Yes, ma'am.
Okay, go right ahead.
I was about to say the the Chime credit builder thing where you got to use your own money. Is that convenient? Then is that more convenient than like dealing with a lender or something like that?
Some people do use Chime to build credit. I always say do it with a bank because instead of you build that relationship with the bank that you can grow with. Because you'll do that with Chime for 2, 3, 4 years, but what can Chime do for you? So here's my homework to you. I want you to research Chime.
Thank you.
Right. No, I did a little bit.
Do they offer loans? Do they offer secured loans?
Right, yeah, that's what I'm saying. They don't.
Right.
They don't offer loans like that's what I said. The credit builder part, you got to use your own money. So like, if I was to put $1,000 in there and set it up with my phone bill for an automatic thing, and then my phone bill $40-$50 a month. If I know every month, just put $50 back in there a day or two after my phone bill get paid, my credit go up like that too.
Let me tell you another way to do it. Regions Bank has a secured loan. You can do it for $250 or more. I always tell people do at least $500 because that's going to be 12 months payment history. The $250 is going to be 6 months payment history. The reason why I say do that one with Regions Bank is because You take $508 into the bank. $8 is the little finance fee they charge. They put your $500 in a savings account as collateral. You sign your loan documents. They give you the $500 right back. A lot of people used to come into the bank and do it on payday, right? So you still have if you got to pay bills with that money, you still got your $500. The only thing you would have paid that day was just the $8. You make a monthly payment on it each month. It's almost $44 a month. You just make sure you pay that on time. Or if you don't need the $500, you open up another savings account, put the $500 in there, plus whatever the little bit of interest is for the loan, and put it on automatic debit and let that $44 payment automatically come out that account to pay that loan. Right? So you never touch it, but you build a credit. But if you need the $500, just make sure you pay your payment on time each month of $44. After 12 months, now you got 12 months of payment history, 35% of your score. And now you got that other 15% of your score that makes up, 10% that makes up a difference as far as different types of credit.
All right. So what if you get injured and on like a private contract job, like you said, life happens, and I get injured and I'm down for a couple of months and I'm not able to keep up with that, and we fall out. How we get back on track with that?
So unfortunately, when it comes to credit cards, loans, your home, anything. These days, in order to get a house, they're gonna use your credit, right? Life happens. It's just the way you rebound out of it. But this is the thing that a lot of people don't do. They can't make the payment, and then they get embarrassed or they feeling down about it, and all they have to do is call the creditor. There's programs they have available to help you to keep it from hitting your credit, or they try to extend it. Like if it's the auto loan, they'll try to do a deferment. If it's a mortgage, they have different plans to help you so you don't lose your house, right? That particular loan, just depends on the bank. What do they have? Always call the lender, tell them your situation, and see if they have something that can help you.
Right.
If not, I'm gonna tell you this. I'm in a big city. I'm from Shreveport, Louisiana, but I live in Houston. I'm gonna do what I got to do. I guess that's for me being a single mother. Something happens where I lose this job, I'm going to do Uber till I get the next one. Right. Uber gonna pay this bill and that bill or something. I'm gonna go, something till that next job come through. I'm gonna make it happen. But I know if you're interested, you may not. But that's just life, and that's just the way it happens.
Hey, Angela. Because of time, in a few minutes, the young men are going to be going with the firefighters. So I want to make sure that you get your greatest points out now. And the other thing is, I wanted to put a bag in to you and Desi, is because this is so interesting, and because this is so great. I wish your heart could find a way to do a follow-up conversation with us within as soon as possible, maybe not next Saturday, the Saturday after that, because I think the guys are really interested, and I think some of them are going to go away from here researching, practicing, and laying into practice a lot of what you talk about. Many of them, a few of them have already expressed it today that they want to open up their own bank accounts, and I would love. So I would love for us to finish if we could, and I don't want to interrupt because you are brilliant. I would love for us to finish the conversation today, telling them the benefits of opening up their bank account, because all of the things that you talked about fall under the guise of a bank account.
That's correct. So, and I think next time we do it again, just kind of break it up in sections. Maybe do one day about credit, one day about banking, something like that. Awesome. So it won't be so long.
So you're committing, Angela, to additional days. Now
I am, but I don't know about February. I have I'm very committed because I enjoy it, but I don't know about February because I have to be in February.
Definitely, we'll schedule it. We'll definitely schedule it with you.
We will. We really appreciate that. And you know what would be good? Let's put this call to action if I can for you, Angela. What would be good is we won't say when the next time you're coming, but let's see how many young men will come back and share with you documents or proof that they opened up their own bank account.
Right,
and we can take them to the next step. Now,
right.
if we could have everybody, how many have, I'm sorry, I'm not trying to take, how many have a bank account already? Okay, and an actual physical bank that's in Milwaukee. Because if it's not, if Bank of America is not in Milwaukee, you're gonna have a hard time banking with them, and it's gonna all be
Right.
online, or you gotta drive somewhere else. So Angela, how you like that?
I love it, but I want more of my young men to have accounts.
Right. Right. And we will.
So I want you guys to promise me, I'm willing to give my time because I am committed to you. And if you can, I'm not gonna tell you when next month, but the next
Right.
time I see you guys, I want you to have, whether it's a checking or a savings. Some of them, because of your age, if you don't have a state ID, a parent may have to take you and be on that account with you. But see if that parent will be committed to taking you. Or like I said, a lot of times you can open some of these accounts up online. You may not even have to go to the bank. So who's committing to that? Let me see some hands. Who's committed to open up a bank account by next month?
Oh, all of us. Yeah. Yeah.
Okay. Wonderful. I'm holding y'all to that.
And Angela,
if you already have an account, you're included in that number.
right. And Angela, we have some other speakers coming in the rest of this month. So, some of them being banks. So I'm hoping they'll aid in that. So when we see you next month, we'll have some good news stories for you.
Wonderful. And you know what, Daisy? Hopefully they provide you guys material to the accounts that they have. And maybe
Right.
they can have some to go with them about the different accounts they have for kids in their ages. Well, you guys are not kids, but young adults in their age.
Definitely. I think the information that you're giving about credit, how to affect your score and how that works, that's a mystery to a lot of people. So that's good information for us to walk away with.
Well, I appreciate you for having me, and I'm sorry it took so long. I know next
No,
time.
no. We appreciate the time you gave us. I think the information you gave was invaluable. Sometimes these discussions are not had by our community, more or less young Black males. So this would be good conversation starters moving forward as well. So thank you so much, and
Well,
happy
thank
birthday
you.
again, Miss.
Yeah.
Thank you. You never know. I may come do the next class in person. So you never know. You may see me.
There we go. There we go.
Oh,
We'll do that.
Man,
We'll do that.
We would love that. Angela, you know, and I'm gonna go here because I'm kind of silly, and I like being silly in a way, and I'm kind of comical, and I hope you can take it. How church are you?
You say how what?
Church.
Oh, I'm all the way church.
Yeah.
Oh, okay, because I'm
I love God and God loves me.
Right.
See, and I'm a custom Christian, and I have the same relationship with God, but I wasn't gonna cuss because I'm gonna respect it. But I just like this rap song. And this rap line came to me since we are celebrating 50 years of hip hop. The lines, come on, listen. The lines of this song came to me. Hair long, money long, me and broke ninjas, we don't get along.
So thank you so much, Angela. I'll look forward to that email. I'm going to share your PowerPoint with the gentlemen so they can actually walk away with this information. And we look forward to our recap next month.
All right, you guys give him suggestions what you want to learn about next month, and I'll be happy to do it.
Awesome.
Thank you
so much.
You're welcome. See y'all later. Have a blessed day.
Thank you. Bye-bye.
So good. So thank you all, everybody. Good. And for those of you all that are out there, thank you for your time. I know some of you probably have left or whatever it is, but I want to say to you, this is where I have to make the plea to you. At 12 o'clock, we're going to pay all of these young men $40 each for their work and for their time being here. We do it every Saturday. And every Saturday, we ask you and you help. There's never been a Saturday that the people haven't come through to help. So if you can, go to Cash App, $ The Cage MKE, or go to PayPal, The Cage MKE, and give. Now just look at it this way. We got 12 young men here. If 10 people